Before we start, I want to say thank you to my first 100 subscribers. That's so amazing and exciting. Thank you. I'm so glad for all of you who follow me on my journey. Thank you so much. Then just start with another part of the Robinhood stock of the week. And today I want to analyze General Electric, or GE. I will talk about the history of GE, we'll go through the financial numbers, and we'll take a look at the management, and then give you my conclusion if GE is an investment right now or not. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. General Electric was founded in 1892 by Thomas Edison and another very famous man, J.P. Morgan. It has a very long history and is one of the original 12 Dow Jones companies. Today, General Electric is working in the segments aviation, healthcare, power, renewable energy, digital industry, and some others. It has over 200,000 employees and a yearly revenue of around $93 billion. Right now, GE is number 16 on the Forbes list of the most valuable brands in the world. But once, in May 2001, General Electric was the most valuable company by market capitalization by far, with a market cap of almost $500 billion. But that's long ago, and just 13 years later, in December 2014, General Electric was barely under the top 10. And right now, it's even worse. The market capitalization of GE right now is 57 billion. So in the span of around 20 years, they lost 90% of their market capitalization or of their market value. And if you want to learn more about that, I highly recommend the video here on YouTube, The Fall of General Electric. Then take a deeper look at the current financial numbers of GE. General Electric right now pays a small dividend of 0.6% with a horrific 5-year growth rate of minus 45%. The dividend for sure is not a reason to buy General Electric. The view on the revenue just shows that the revenue decreased over the last 5 years by minus 3% per year. That's not very impressive. And this revenue comes for most of the aviation sector, then healthcare and power. And it comes from all over the world, but the most revenue is still made in the US. And so we saw that in the past there was a decrease in the growth, a negative growth, and also for the future, Yahoo Finance estimates a growth over the next 5 years of 0.6% per year, which is almost nothing. And this bad scenario just continue when we look at the margins. General Electric works on very low margins, and the net margin is even negative over the last few years. At least there is some positive trend, but at the end, right now they're still negative. And the same picture we see on the returns, for example here with the return of investment, and also with the EPS and with the free cash flow. All of that don't look very impressive. Then take a look at the balance sheet. The debt equity ratio is still high at 1.8, but at least in the last few years, General Electric decreased the debt a little bit. So maybe this is also a continuous trend, hopefully, for General Electric. But 1.8 is really high for debt equity. Normally, I just invest in companies with a debt equity ratio of under 1. But at least they have a nice current ratio of 1.91. This is very solid, very stable. So even if they don't earn money right now, they will not face bankruptcy anywhere soon. But what's really a disaster is the shareholder equity. Over the last 5 years, there is a minus of 20% per year in the shareholder equity, and that's really horrific for every shareholder. That's not fun. If you hold this stocks for a while, you don't have a lot of fun with this company. Then take a look at the management. The current CEO is Larry Culp. He's a CEO since October 2018, and before he was a CEO of Danaher Corporation from 2000 to 2014, and he was very successful there. He was named one of the top 50 CEOs in the world by the Harvard Business Review. And also, if you look at the stock price of Danaher and in comparison of GE, you see that he was very successful. So here you can see that Danaher over this span not just outperformed General Electric, it outperformed the whole market. For me right now, when I look at General Electric, Larry Culp is maybe the only hope I have. This big chip of General Electric can be turned around. Then take a look at the current price. First of all, the chart of General Electric is an example that the stock price just follow the earnings of a company. And if you remember the financial numbers I showed you before, you just see that the stock price just follow in the same direction, in the wrong direction, of course, for a shareholder. And that's the same all over the time in one way or the other. But back to the current price of General Electric. General Electric is currently traded at $6.69. My calculated intrinsic value is around $5, and I used therefore the estimated growth by Yahoo Finance, the very low estimated growth by Yahoo Finance, and then you come to an intrinsic value of around $5, which means that General Electric right now is overvalued. But then, of course, you can think about and say, yeah, but it's so big and have so much assets and so on. What's about price-book ratio? But even if you look there, the price-book ratio is at 1.59, even with the stock price dropped so much. And this is not cheap also. So in every view, it looks like General Electric is at least not undervalued. In my view, it's overvalued, and therefore there's no reason to invest in General Electric, at least in my opinion. So what's my diagnosis then for this struggling patient? For me, of course, General Electric is still a very strong brand with a very successful CEO, at least in the past at Danaher. We will see if we can do the turnaround with General Electric. But there are so many red flags. There is no growth in the past and there is no growth in the foreseen future. There are negative margins and returns and still a high debt. Too many warning signs for me. But of course, there are some glimpses of hope and there are also some signs of a turnaround. And so maybe it's worth a bet. But for me, as a value and long-term investor, I don't like to bet on a company. I don't like to bet at all. I want to invest, and I want to invest stable companies with high margins, and General Electric is not right now. So for me, General Electric right now is a big no. That's it for today. I hope you liked the video. If so, give me a big thumbs up, subscribe to the channel, ring the notification bell to never miss another video. And then we see you soon on Wednesday, then with a portfolio update and another analysis of a stock out of my watch list. See you then, take care, and have a great weekend.